Canada's July GDP rebounded from 3 months of contraction. There was growth of 0.2% in July, beating expectations. Let's get more from Dominique Lapointe, Director of Macro Strategy at Manulife Investment Management. Dominique, thank you very much indeed for joining us. So the projection I'm hearing now is that we won't have a negative third quarter, so we dodge a recession in the sense we won't have 2 quarters in a row that are down.
Yeah, that's true, Andrew. So if you take that July print and you factor in maybe 0 in August, maybe a little bit in September, it looks like it might have expanded by close to 1% annualized in Q3 following the decline in Q2. So it's close to where the Bank of Canada has made their forecast in July, but it's not a pretty picture. It's not an economy that is really accelerating. I don't think we should focus on the fact that we have avoided a technical recession here.
Right. You say activity remained generally weak. Oil and gas was a big part of the gain, but it was a catch-up from maintenance of facilities in previous months.
Yeah, exactly. Like most springs, they go through their scheduled maintenance, and now we see a catch up there. And it's the same thing for motor vehicle production in July. It seems that a seasonal factor was at play. So if you remove that, it's weaker. And at the same time, retail trade was down in July, and hotels and restaurants were also soft. So that's consistent with where the Bank of Canada was telling us the economy was going, which is softer consumption in the second half of 2025.
The October 29th is we're due to get the next Bank of Canada decision, and you think we are going to get another reduction?
Yes, I think that if they do forecast softer growth ahead, that print hasn't changed the picture. We don't see any scope for any reacceleration soon. And if they went out on the sidelines to cut last month, it's probably for more than one cut. They want to make sure that and they support employment and the housing sector. So yes, we still think that they're going to cut another time on October 29th.
We are going to get a massive amount of spending from the government, it looks like, over the next year or two on these so-called infrastructure projects and, of course, defence. There's been dramatic promises to increase expenditures there. But I suppose that stuff, some of that stuff takes a while to burn through into higher economic activity.
Yes, it takes time. And actually, this morning, StatsCan told us that the first full month of operations for the LNG terminal in BC is having an impact on GDP, but this has been in construction for many, many years. Mm-hmm. So any new infrastructure projects beyond the approval process will take time. I think the budget will be useful in terms of assessing how much of the support the government is giving to industries that are impacted by tariffs, but that's merely putting a floor on where activity is going. I don't think it can have the capacity to meaningfully improve productivity or potential GDP in the country for the next 2 years, and the next 2 years where the Bank of Canada is looking.
What about the government? Government keeps insisting that, well, we're in pretty good shape compared with other G7 countries in terms of deficit as a percent of the GDP. What is your feeling? Do you think the government has latitude to really apply fiscal stimulus by running deficits?
It has some latitudes, and it's true that even with 3% of GDP deficits, it's still going to be less than half the U.S., lower than many European countries or Japan. However, we do think that if we want to be concerned about the fiscal situation and the bond market, the situation has changed in the past 2 years, and we've seen that in the UK 3 years ago when the budget came in higher than expected. So even if at this point there's still some latitude, I would be careful about not thinking about the fiscal projection, because the bond market seems to be a little more reactive to negative fiscal surprises.
Yeah, so November 4th, we get this deficit. There's talk of fiscal discipline, but I'm guessing that every government since the dawn of time has talked about fiscal discipline.
Well, we've seen news report, and that's what's going to be interesting in the budget is that are the cuts that are supposedly going through the government now in terms of program reduction really filtering through? Mm-hmm. If that's the case, maybe there's some substantial economy that can be realized. But we're going to need to see the budget to see if that's more than just intentions.
Yeah, I'm guessing the pharaohs said, we're going to build more giant temples, but we'll apply fiscal discipline here. Do you have a view on the Canadian dollar? I know it's so interest rate driven. It's interesting that it hasn't dropped more, I think, given that our yields and rates are so much lower than the States.
Yeah, so the yields, if you want to talk about the yields differential with the United States as a change, they've been very stable in the past couple of months because yields also went down in the U.S. because the market has integrated more Fed cuts. So as long as we're in this situation, the Canadian dollar will be relatively flat. There's broad-based weakness coming from the U.S. dollar, essentially because it's depreciating against the euro. And I think that's what's supporting the Canadian dollar right now. If that wouldn't be the case, then probably we'd have a weaker loonie. Mm-hmm. We think that for the next couple of months, it's going to continue to trade flat. Same thing for the U.S. dollar, in fact.
I have to ask you, just as an economist, and I know you're not a tech analyst, but when you see this stunning hundreds of billions of dollars, literally, on AI data centers that has been announced. Of course, the spending will actually take many years in the United States. But what do you think? Is there a risk of white elephants being built here if we don't need all this data center capacity?
I think it's a big risk, but no one is really sure what ultimately will be the economic gains or the productivity gains from AI. And I think it's on one end, Canada's sort of lacking these kinds of investments. So if that's being realized, I think we have to be more in this space. Mm-hmm. However, if you just remove AI investment in the U.S., overall business investment would be flat this year. So if that doesn't pan out, I think that the U.S. will be in a more difficult situation. But I think we're only going to be able to know a couple of years from now.
It's a fascinating story. Dominique, thank you very much indeed.
Thank you.
Dominique Lapointe, Director of Macro Strategy at Manulife Investment Management.